Thank you for joining us today for our Form 5500 reporting webinar. There's been lots of talk in the employee benefits world lately about COBRA, and this is actually a great reminder that other plan obligations and deadlines continue to apply. So thank you again for joining us. Before we get started, I do want to go over a couple of housekeeping matters. This webinar is being recorded, and we will distribute the recording and slides to all who registered. So feel free to share with any of your colleagues who couldn't join us today that you think might benefit from this webinar. If you're having audio issues and you are using the internet to connect to your audio, we would suggest that you try calling in on the phone number that appears in the webinar panel. Sometimes we're at the mercy of our internet connections, so if you are having problems with your internet audio, do try calling in on the phone line. We will be answering questions submitted today in the question panel. You can open up that panel and submit a question, and we will answer those following the webinar. We will include a Q&A in our follow-up in case we aren't able to get to your question during the webinar. So with that being said, today we're going to talk again about Form 5500 filing requirements, including the logistics of who has to file, what, when, and why filing is needed, and why it's important to remember Form 5500 filing obligations. We're going to talk about some filing scenarios and issues, and also talk about your questions again at the end. Some quick updates from our team. We have a dedicated email for our 5500 prep team. If you need to reach us, you can use this email address to ask questions about 5500, and it's actually the email address that we use to correspond with our Form 5500 client. A reminder that we have ongoing compliance support for employers and advisors who work with us. You can always reach us at compliance@probenefits.com. This is our compliance team email address. But good news, if you have a question and you're not sure where to send it, feel free to send it to either of these email addresses or to your account manager, and we will make sure that it gets to the right person to address whatever question or issue that you have. If you're in need of any training materials on our recent webinars, they're located on our website, including our last webinar on the ARP COBRA subsidy, but there are other topics there too that you may find useful and helpful to you. And if you can't find what you're looking for, let us know and we can help you with that. So why are Form 5500 filings important? Why is this an important topic? This is actually a key compliance requirement for many employers. One of the things that people often forget is that Form 5500 filings are formal government filings. They're accessible by both the Department of Labor and the IRS, and they're actually accessible by the public. We're going to show you that a little bit later in the presentation. But they're filings that are made and easily searchable and I think too easily reviewable by the government, since there is an online filing system. And lastly, the penalties are substantial for late and omitted filings. The current statutory maximum penalty is $2,259 per day. So you can see that having a late or omitted filing, the penalties can add up very quickly and become very costly. Just to talk a little bit about the legal context and where this fits in ERISA. These are the general categories of ERISA requirements. These are very broad categories. Obviously, underneath each of these, there are certainly more detailed requirements. But ERISA's primary components includes claim and appeal guidelines, fiduciary responsibilities, plan document, and summary plan description requirements, COBRA, HIPAA, but it also includes a reporting requirement, and that's the Form 5500. So what employers actually have to comply with this? And I want to start out by saying that the requirements for health and welfare plans are different than the requirements for retirement plans. We get that question frequently. Oftentimes, employers may file, or they have their retirement plan TPA filing a Form 5500 for their retirement plan, and they either forget that the health and welfare plan may need to be filed, or there's a misunderstanding that perhaps the TPA that's handling the retirement plan is also handling the health and welfare plan. So generally, all employers with an ERISA group health plan are subject to the Form 5500 filing requirement. There are only two exemptions. Churches and government entities are not subject to ERISA. Those exemptions are very complex. So if you have a question about whether either of those exemptions might apply, I certainly recommend that you consult with legal counsel about that, because they are complex. And if you get it wrong, you could be missing lots of ERISA compliance requirements, including the 5500. Retirement plan filings must be filed for all group sizes. This is where I mentioned that there is a distinction between health and welfare and retirement plans. There is an exemption for health and welfare plans for small plans. So based on the size of the employer, generally a Form 5500 is only required if there are 100 or more employee participants as of the beginning of the plan year. And that's another area where we often get questions from employers and broker partners, is whether the count is as of the beginning or the end of the plan year, which one of those actually triggers the filing requirement. This small plan exemption does not apply if the small plan is funded by a trust. We do see that from time to time, but I will say it is probably not the norm. So let's talk a little bit more about that small plan exemption. Again, it's going to apply if the small plan is unfunded, meaning there's no trust paying benefits from plan assets. The employer is paying premiums and benefits from its general assets. Or if the plan has less than 100 employee participants on the first day of the plan year. So those are the two requirements to fall up under the small plan exemption. And I will say it is possible, and we do see employers who bounce back and forth between the small plan exemption and not qualifying for that. And there is a code that we can put on the Form 5500 that alerts the Department of Labor to the fact that you have fallen below 100 employees enrolled and will be taking advantage of the small plan exemption. So we kind of see three categories of groups: those that are small, that don't have a trust, that aren't required to file; those that kind of go back and forth between having 100 and not having 100; and then larger employers who are well over the 100 employee participant threshold. So the end result is that a health and welfare plan does have to file only if funded by a formal trust, so not qualifying for the small plan exemption, or if there are 100 or more employee participants on the first day of the plan year. And I want to remind you that the participants that we're looking at for this count are employees. So the number of employees enrolled, not employees plus dependents. If a filing is required, it is due by the end of the 7th month after the end of the plan year. So for a 2020 calendar year plan, their filings are due July 31st of 2021, and that's coming up here soon. If the plan is a May 31, if the plan year started 11/1/19, the filing deadline is 5/31/21, and if the plan year started 12/1/19, the filing deadline is 6/30/21. So those are all of the deadlines that are coming up here in the next couple weeks/months. There is an extension of time available for employers if additional time is needed to file. That 2.5 month extension is automatic if you file Form 5558. Interestingly, the Form 5500 is submitted with the Department of Labor, but the extension for filing the Form 5500 is submitted to the IRS. And those do have to be mailed. It has to be postmarked by the due date, the original filing deadline for the plan. But that 2.5 month extension is automatic. There's no penalty for requesting additional time. And that is something we do on behalf of our Form 5500 clients if you need additional time to file. Interestingly, I would say that extensions are one area that can cause some confusion or cause some problems for employers, especially if you're not being consistent when you file the extension with the Form 5500. So if you're trying to do an extension for yourself, make sure that you're taking care in how you fill that out. But again, if you need an extension and you are a Form 5500 client of Pro Benefits, we will file that on your behalf. We often see that the IRS is very slow in approving extensions. Frequently, the approval letter comes after the filing is submitted, so they're running probably about 2 to 3 months behind in getting those letters out. So we often see that does cause some confusion as well when you get that letter from the IRS about the extension, especially when you've already filed the filing. So just be aware of that. So what benefits have to be filed? Any benefit that is subject to ERISA is going to be subject to the Form 5500 filing requirement. So this is a list of those benefits identified in ERISA and subject to ERISA. We've got kind of the usual suspects here. We do have a couple of benefits that have asterisks beside them. So we've got short-term disability wellness programs and EAPs. And I will say that these asterisks are here because sometimes these plans may or may not be subject to ERISA. So for short-term disability, if the short-term disability is a payroll practice of the employer paid out of general assets, that plan is not subject to ERISA and wouldn't be included in the filing. For the wellness programs and the EAPs, the determination is really going to turn on whether those programs provide medical care or not. And sometimes those do, other times they don't. So that's kind of a fact-specific inquiry as to whether those need to be included. So now I'm going to turn it over to John Cobble, who's our compliance specialist and heads up our Form 5500 preparation efforts. And he's going to go over some practical filing scenarios and some practical tips on the Form 5500 filing.
Thanks, Laura. As Laura mentioned, the ERISA compliance is one aspect of why it's done. I'm going to talk a little bit more about the what and the how. So I'm going to present a couple of filing scenarios. The first scenario here is a multiple plan filing in which you'll see the entity has 6 ERISA plans. Typically, we see this when all the benefits are separate and there's not a consolidated or wrapped filing. A lot of times, if a company has one plan or one benefit that exceeds that 100 participant threshold before some of the other ones, then the plans may join or may reach that filing requirement separately, and so we would add them separately. In this example, the benefits provided are a health benefit, dental benefits through different carriers, and a bundled life, short-term, long-term disability filing or benefit through one carrier there. So in this case, with the multiple plans, this would be 4 individual Form 5500s, one for each ERISA benefit. The health, the dental would be considered one, and we would have the 2 carriers there. The life disabilities can be filed together since they are provided under the same carrier, and then the health FSA would be its own filing there. Typically, the way that the plans would be laid out, Form 5500s for health and welfare benefits generally start with 501. You may be familiar with your retirement plans that usually start in the 001, 2, 3. 500 usually starts your health and welfare plans. And so for consistency, if we were advising you, we would stick with the employer name first, and then generally try to keep a consistent template for the name there to lay out the type of plans that are available. The other common filing scenario is a wrapped or consolidated SPD. This is something that a TPA like Pro Benefits would prepare a wrap document for you, which merges all benefits into one coverage plan. This way, there are advantages to both. As I mentioned with the first scenario, if you only have one benefit that has more than 100 employees participating, then the advantage there is you just have to file one benefit. But if you have multiple benefits that need that filing, it could be simpler to consolidate everything into one wrapped SPD and merge them together. And so in this case, as noted here, we would have a single plan number, and then the wrap document itself would name the plan. So our general convention would stick with the employer name, health and welfare benefits plan, but we see many varieties. If a wrap document was prepared a long time ago, then there could be an older form for that name. The name can be changed at any time, just requires an amendment to the SPD, but generally you'll see it in this format. I'm now going to take us over, Laura had mentioned earlier, the public availability of Form 5500 filings. So I'm going to take us to the federal government's, or the DOL's EFAST site. This is a site that we use regularly to search for filings. And I'm just going to do a sample search here. Whenever we're helping to prepare a filing, then we would use this site to look at the history. And this is where anybody can access the filings that you've done previously. We had an EIN populated here for Apple Inc., and I've just narrowed it down to their 2019 plan year filings just for convenience. You'll see here that they had, for 2019, they had 3 retirement plan or pension plan filings. That's plan number 1 and plans 517 and 518. We're going to look at the 510 health and welfare plan. Incidentally, we do not do the filing for Apple, but if any of our broker partners out there are interested in tackling that, we'd be glad to help on that. You'll see the format of the 5500 generally laid out the same for all plans. The same form is used for both pension and welfare plans. So sometimes we get questions about boxes that are unmarked or data that's not filled in. Some data is used for a pension filing and other data is used for a welfare filing. But generally the name and identifying information, of course, is the same for the plan. If I scroll down to the page, this is the page 2 is where the benefits generally are listed separately. You'll see here in the middle, section 6 is where the counts are listed for those employees that are participating. Clearly, Apple had more than 100 at the start of the plan year, so they definitely need to file this. Section 8 here, you'll see blank is pension benefits listed at the top, health and welfare benefits listed in section B. So this is one of those scenarios where you won't fill out all of the data. for each one. And then the type of filing, Laura mentioned that things that are benefits covered under a trust, there's a specific mark for that. And then whether it's covered by general assets of the company or covered by insurance. And then the Schedule A's that are included there. I'm not going to scroll down through all 12 of their Schedule A's, but we would note the Schedule A's and then any other necessary information for the filing that's included. All of this, you'll notice that the filing goes on 51 pages. When a Form 5500 is prepared, it's prepared as a single document with the Department of Labor, so it all shows up as one single PDF document in file. And so if you needed to access it, you don't have to click on each component of it. You can just scroll through to find what you need there. The other part of Form 5500 that we prepare is the summary annual report. The summary annual report is simply what it says. It's a summary of that 51 pages that was prepared for Apple that just gives an overview of what benefits were provided and how much was paid out for those benefits. In my tenure of doing 5500s, I have had one employee request the full report after receiving the summary annual report. And for the record, the full report is simply that filing that's on file at EFAST. So by and large, there's really no reason to look at a full report because it's just a long form version of what the SAR will tell you. But the summary annual report, along with the filing requirements, it has a distribution requirement. You'll see there that it should be distributed within 9 months of the end of the plan year. Obviously, if you request an extension, that 9 months occurs during the extension period. So there's leeway there, but you certainly want to distribute the SAR as quickly as possible. The method for distribution is a common question that comes up. You can either mail or email the summary to your employees, or if you have a benefits portal, you can provide a link to the SAR on that benefits portal so that employees can access it. I have shared that our company practice, the president of the company simply sends an email with the summary report linked in and says, if you participate in the plan, here's the report. If you don't participate in the plan, then you can disregard this email. It can be that simple. There's no formal methodology for distributing it, just so long as you are distributing it to those employee participants. You'll notice one note there that unfunded welfare plans, such as health FSAs and health reimbursement arrangements, are exempt from the summary annual report, though we will often include, when we put the data in there, we will often note that the plan has sponsored an FSA just in case there's a question about it. It's at least referenced in the summary annual report. Some common compliance questions and issues that people come across, particularly the most common one is a failure to file for an eligible plan. As Laura mentioned, sometimes this is due to a misunderstanding of ERISA requirements. Other times it's simply an oversight that, if you're a new company and you didn't know that this requirement was here, you might simply not know that you should have done that. But that's one of the things that we can catch up. Also, late filings without extensions. A very common question that we receive is, can I request an extension after the filing deadline? The extension must be postmarked by the filing deadline in order to be valid. So if that filing deadline has passed, then there's no point in submitting an extension because it won't be accepted, and your filing would just be filed delinquent or late at that point. And then also, a lot of times folks misunderstand the need to have a wrap document in order to file a single 5500, and they simply combine the benefits into the filing, but they don't they don't have a wrap SPD that dictates being able to do that. And so we have to go back and break those benefits out in order to get the filing corrected. I'm going to turn it back over to Laura at this point. She mentioned earlier that penalty for noncompliance, and so she's going to talk a little bit more about how we can help avoid that.
Thanks, John. Before I move on to the consequences, I want to mention another thing that sometimes we see happen with extensions. If an extension is timely filed, we cannot file a second extension. So you only get one extension of time. And if the filing is not completed by the extended deadline, then the delinquent penalties go back to the original deadline. So it's important to make sure that you're getting those things filed timely. And we send reminders frequently and as we approach deadlines and extended deadlines to remind you of that. As far as the consequences of noncompliance, the big one is that there is a statutory penalty, a statutory maximum of $2,259 per day. And I did the math for us. If you are a year late, the penalties would be $824,535. And that's enough to put a business out of business. And sort of took my breath away when I did the math. So there is a severe financial penalty for delinquent filings. Typically, we see that the maximum penalty may not be assessed by the Department of Labor. So if the Department of Labor discovers your delinquency or the error, they can come in and assess a penalty. They don't necessarily have to impose the $2,259 per day, but it certainly will probably be higher than the delinquent filing program penalty. And if you discover an error or omission or late filings, those can be remedied through that program that I mentioned, the Department of Labor's Delinquent Filer Voluntary Compliance Program, or DFVCP. The good news about this program is that it offers employers an opportunity to self-report errors and omissions or late filings in exchange for reduced penalties. The key to this is that it has to be done before the Department of Labor discovers the problem. So if one thing we see frequently asked in Department of Labor audits is for Form 5500 filings. And not only for the retirement plan, but for the health and welfare plan. So sometimes the audit may be more focused on your retirement plan, but the Department of Labor may take the approach that since they're there and they're asking, let's just see it all, not just your health and welfare filings. So it's important, if you discover an error, to go ahead and take a look at how that can be corrected and work on getting that remedied through the delinquent filing program. The specifics of the delinquent filing program, again, I mentioned the reduced penalties. Occasionally, we have employers who are missing multiple years of filings, and sometimes the question is, well, how far back should we go? Generally, the best practice is to go back and see when you first hit that 100 employee enrolled threshold. So when did the filing requirement first apply? Sometimes, depending on how far back it is, there may not be schedules to go along with that. There may not be business records. I do see that for fully insured plans, the carriers are able to go back pretty far, but I'm sure that there is some date in the past that the ability to get those schedules diminishes. So best practice for late and any omitted filings is to go through the delinquent filing program and take a look at an analysis of how far back you should have reported it and use that as your starting point. Again, this program is available until an employer is notified by the Department of Labor that they've discovered the issue. The penalties are substantially lower than the $2,259 per day, which is actually an indexed amount that goes up every year. So that's the amount for 2021. But through the delinquent filer program, the penalty is $10 per day from the original filing deadline. So let's just say you had a filing that was due April 30th and you missed that. You would be looking at $10 per day from April 30th until the day that you file the delinquent filing. So the filing of the delinquent filing stops the penalty clock. If you are more than just a couple days or a couple months late, there are actually caps per plan year of $2,000. So that $10 per day will start to accrue, and it will continue to accrue until you get to a $2,000 cap. And that's per plan. So in John's scenario earlier, if the employer has 4 filings and they're all 4 are late, then you're looking at $2,000 penalty cap for each of those plans. The maximum penalty if you're missing multiple years is $4,000 per plan. So going back to our scenario of 4 plans, you're missing 2 or more years, you're looking at $4,000 per plan maximum. So we're still talking about a good chunk of change, but certainly much less than the $800,000 that we talked about under the statutory maximum. So if you as an employer or any of our broker partners, if you are working with an employer that has some filings that need to be cleaned up and brought into compliance, feel free to reach out to us. We can help you with that. We can help walk through the analysis and help give you some tools to figure out when the filing should have been made and also how to gather Schedule A's from the respective carriers. Again, if we do provide Form 5500 preparation service. We have 2 attorneys on our compliance team, myself and Sheila Cohen, and we can help you walk through a first filing. If an employer has never filed before, there are generally lots of questions. But we also look at filings that are new to our prep service. So we'll, if you as an employer have been filing previously as part of our onboarding, we take a look at that just to make sure everything looks good and there aren't any questions or issues, potential issues that we might see. Our process is very simple and streamlined and automated. We use a data collection process, either through the employer directly or it can go through the broker. We send that out about 90 days in advance of the filing deadline. So it's also a great reminder that the filing deadline is coming up. We do send out the data collection a little earlier for those groups who have calendar year plans because July is such a big filing month. We also have an easy-to-use website for review and submission of the filings. We confirm that the filings have been submitted and are going to follow up with you to collect data in future years as well. As John mentioned, the summary annual report is included, as well as ongoing compliance support. So if you have an issue in the future about a 5500, we can certainly help with that. And finally, it's an economical fee. So if you're interested in Pro Benefits assisting you with Form 5500 preparation, reach out to us and we can certainly discuss it further. Just to give you a little bit of more information about our review and submission process. So we do send the data collection email out approximately 90 days in advance of the filing deadline. Once we have all of the data, the participant counts and schedules, then the draft form is prepared, and it's emailed to the employer with login details and instructions on how to submit the filing. The same is true for the delinquent filing. If you've got a delinquent filing, that email will contain instructions on not only how to submit the filing, but also on how to pay the delinquent filer penalty. And we are always able to assist if there are any questions that come up about that process. The signer, who's usually the plan administrator, will log on through our website, review the Form 5500 for accuracy. If there are any questions or any parts of the form that the employer's information is different than the carrier's, we can certainly go in and address that. But once the signer approves the draft Form 5500, it's submitted online via electronic filing with eFax2. The eFax2 system does require an ID and PIN. If the signer is the same person who is signing the retirement plan filing, they can use their same eFax2 credentials. But if it's a different person, that signer will need to register with eFax2 to get signing credentials. There is a requirement to keep a signed copy of the Form 5500 on file. So once you review it and submit it, there's an option to download a copy for your files. And the submission is and acceptance is instant. As soon as you hit the submit button, it's verified by the Department of Labor and also by Pro Benefits. And you can actually go back to that website that John showed earlier and actually see the submission. I do want to mention just briefly, in 2016, there were some proposed revisions to the Form 5500 reporting process. These changes including an elimination of the small plan exemption for those plans under 100 employees enrolled, and then a new Schedule J, which would have been an additional reporting requirement. The Department of Labor had a comment period that closed in fall of 2016, and nothing has been done with these proposed changes as of right now. We continue to monitor this, and we'll provide you updates if something happens. If I had a crystal ball, I imagine that if this administration does revisit this, it will probably be post-COVID and certainly post-COBRA subsidy. But this is out there. You may see it if you're doing some reading and some research on 5500. So I just wanted to mention briefly that it has not taken effect yet. Again, if we can help you with Form 5500, we would love to assist you with that and help you maintain or gain compliance with the reporting requirements. We also offer full focus on plan administration and compliance as it relates to administration of FSAs, HRAs, HSAs, COBRA, POP, and Transit. So if you'd like more information on those services as well, please feel free to reach out to us. One of our other ERISA compliance services is the WRAP SPD prep. If that is of interest to you, again, reach out to compliance and we can assist you with that. We'd like to thank you for attending today. That concludes the webinar. We are going to stick around to answer questions. Again, if you have a question, feel free to include it on the control panel. You can open or expand that panel to see the replies. Or if you have a more specific question that you want assistance with, feel free to reach out to us at compliance@Pro Benefits today, and we can circle back with you. Thank you again for joining us. We hope you have a great rest of the week, and we wish you all a safe and happy Memorial Day weekend.